We have major new developments in the Israel-Hamas war. It looks like, according to Iran, they could be getting involved within the next 24 hours or so, by tomorrow morning. This is probably not going to be great news for our markets. It looks like things are getting a whole lot worse before they are going to get better. What could this mean for stocks, for Tesla, for the broader indexes and your money? How am I hedging my portfolio, protecting my portfolio in case things do go south? I'll let you guys know here in this video. If you guys want to come trade with us, get access every time I make trades in real time, almost every single day, link down below in the description of this video. But when you're looking at potential downside of 20, 30, 40%, if this does escalate into a regional war, it could pay to have some protection on your portfolio. Now, besides that, we are going to get into Tesla stock and all of the Tesla stock news that you need to know. And there is quite a bit of it as we do head into Tesla earnings on Wednesday. What do the options look like? How are institutional investors positioning their Tesla positions ahead of Tesla earnings, as well as the technicals? What are the technicals telling us? Are we bullish? Are we bearish? We have all of that and much more for you here in this video. Hit the like button if you own a share of Tesla stock at the bare minimum, or you are looking to buy more Tesla stock here in the near term future, as well as subscribe to the channel if you guys want to stay up to date with all of this information each and every single day, information that will hopefully make you a wiser investor, and my goal is help you make more money. So we are going to start off this video with the latest developments in this Israel war. As I have talked about many times, this one in particular, if Iran were to get involved, does have a big financial implication for the US and basically the entire globe. The Strait of Hormuz does flow about 20 to 30% of the world's oil through it on a day-by-day basis. The Strait of Hormuz has Iran to the north and Saudi Arabia to the southwest. Let's call it that. This is a picture of oil tankers taken from Bloomberg on any given day. And a lot of the world's oil passes through here. If Iran wanted to financially cripple the world, or the US in particular, Europe, for allowing, quote unquote, this conflict to escalate and Israel to, presumably invade Gaza, well, they could just restrict that flow of oil, and that could cause, oh my gosh, you don't even want to think about it, 10, 15, 20, $30 gallons of gas. It's hard to even say, but it would be much, much higher than anything you have ever seen in your lifetime. That would obviously push the US economy into a recession. You could argue a depression if it lasted for more than a month or two. Big financial implications here. That's why stocks could potentially fall 20, 30, 40%. It's one of those situations where, kind of like a Rona, we just don't know how bad or what kind of effects this could ultimately have, but we know they would be bad. The Iranian foreign minister said about 2 hours ago, quote, Iran will not remain an observer in the situation and has informed Israel via its allies if its crimes in Gaza continue tomorrow will be too late. This is according to Al Jazeera. This is a news agency that does cover a lot of political tensions in the Middle East. Israel is obviously not going to stop their march on Gaza City. It is not officially started, but probably by tomorrow, I would imagine they are going to be making their way into Gaza and ultimately Gaza City. Now, it almost seems like the US government knows that something is about to happen. We just sent another aircraft carrier to the Mediterranean. This is a strike group. Some of these strike groups, the Gerald R. Ford and the other one that was sent, I don't know the name, doesn't really matter. These strike groups alone have more firepower capability than most people's entire armies, entire militaries, okay? These are serious ships that you don't want to play with. Well, the U.S. announced 4 hours ago, more U.S. attack aircraft have arrived in the Middle East in a move to bolster defense posture. These are attack aircraft. These are not defense style, things. These are not what we're sending to the Ukraine, for an example. They go on to say that, quote, A-10s from the 354th EFS have arrived to the U.S. Central Command Area of Responsibility at Air Combat Command Post on social media Sunday. They just announced this late last night and they already have these planes here. I hope this situation does not get worse from here, but it's not looking likely that it gets better either. And 3 hours ago, Israeli fighter jets strike Hezbollah military infrastructure in Lebanon. Quote, at the same time, a report was received regarding a shooting towards IDF soldiers along the border of Lebanon, it said, adding IDF soldiers in the area were responding with live fire. It looks like you could soon see Hezbollah in the fight, and Hezbollah is a lot bigger of a threat than Hamas. They have 140,000 plus missiles that have the capacity to hit Tel Aviv, Israel's capital. This maybe and or Iran is why the U.S. is sending so much military power to Israel. Aboard this second U.S. strike carrier group, you have an amphibious assault ship, the USS Batten. It is comprised of more than 2,000 Marines and sailors that would be capable of supporting a large-scale evacuation. Among the mission, essential tasks for a Marine Expeditionary Unit are evacuation operations and humanitarian assistance. They're moving this closer to Israel in case maybe there was needed some extra troops in the region. This is not great. Now, again, I hope for the best, but in regards to the markets, as a trader, as an investor, the markets hate uncertainty. It looks pretty certain that we're going to get more uncertainty, that the markets on Monday are going to look at this as escalation of this conflict and potentially having that undesired effect on oil. It wouldn't be hard for Saudi Arabia and Iran to restrict the flow of oil. They produce a lot of oil. They export a lot more than they produce. Unlike the US, we are the #1 producer of oil. And I think I failed to say this in one of the last videos, but oil is traded as a global commodity. So if you're a country like in Iran or a Saudi Arabia that produces a lot more oil than you consume, then you really don't get hurt as much by watching the price of oil go to $150 to $300 a barrel. You might actually make more money off of that by restricting the flow of oil. So what's going to happen is you're probably going to see more money flowing into treasuries. You're probably going to see a lot more money flowing into gold as well. GLD had its best day since 2020 on Friday. That means investors were buying a lot of gold and a lot of treasuries. That's a safety trade. That's a risk-off kind of trade. Now, to some degree, if bond yields do fall a lot, that's going to be bullish for stocks once the uncertainty does go away. So as long as this doesn't go to the worst possible outcome, Iran, Saudi Arabia restricting 20-30% of the supply of oil, even a 10 or 15% restriction would have dramatic effects on the price of oil, the price of gasoline at the pump. But as long as that does not happen, we get over this conflict, the markets will soar higher if bond yields have fallen a lot. But as long as you're seeing this flight to safety, stocks are not going to do well. So don't be confused based off the correlation we have seen in the markets recently, where bond yields have went lower, stocks have went higher. Why is that happening is the biggest question. If investors are fearful and they're buying bonds, driving down yields, they're not going to be buying stocks. They're not going to push the markets higher. But eventually, if that fear trade does go for so long and bond yields come down, stocks come down, then investors are going to say, hey, once the situation improves a little bit or we're not getting any more bad news, certainly not like we did over this weekend, just bad news after bad news, escalatory action after action after action, the markets will get over it and markets will soar higher. This week, you are going to get some earnings. You have some banks like Charles Schwab, First Service Bank, First Bank, and Cross First Bank shares that do report Monday. Tuesday, Bank of America, Johnson & Johnson's, Goldman Sachs Tuesday morning. Tuesday afternoon, Interactive Brokers, Pinnacle, Wintrust, United. Wednesday pre-market, P&G, Morgan Stanley, Abbott, Bancorp, M&T Bank, the NASDAQ, Ally, First Horizon. Wednesday after hours is the big day for stocks. You have Tesla earnings, Netflix, Las Vegas Sands, Discover, Alcoa, Columbia Bank, Zions, Steel Dynamics, and a couple others. Thursday, you're going to have American Airlines, TSMC, and Blackstone. Thursday, after hours, Intuitive Surgical, Bank of Ozark, WD-40. And on Friday, you're going to have American Express, Huntington, a couple other banks as well. So it is the start of earnings season. Friday, we had banks report earnings. Bank earnings were actually really good, so there wasn't a lot of fear there. But some of the comments made by Jamie Dimon were not exactly so pleasant. Jamie Dimon, JP Morgan's longtime CEO, probably one of the most connected individuals in the world, said he is preparing the firm for any possible outcome or situation that could arise due to this Israeli war. That would be a broadened kind of regional war and maybe a huge spike in oil. They're getting ready for that. If JP Morgan's getting ready for that, usually that's not a great sign. EPS estimates for Tesla's earnings this week sit at about 73 cents. 3 months ago, the estimates were 85 cents. So estimates have come down quite a bit. Last week, we actually got quite a few bank downgrades of Tesla shares. So that makes the bar a little bit lower. I think if you're a Tesla stock investor, you need to head into this week saying, hey, we're probably going to get some downside here in the markets. This Israeli war is not going to be a great thing for all stocks, Tesla included. But coming on Tesla earnings, the numbers don't matter as much. As long as you are close to the estimates, plus or minus, the stock is not going to rip higher based on a EPS beat. It's not going to rip higher based on a margin beat. It's going to rip higher based on the Cybertruck and forward-looking guidance. That's what is going to cause Tesla stock to move higher. And that's what I'm expecting. I'm expecting Tesla stock is going to do well following earnings. Probably a 5 to 10% move higher, due to the simple fact of expectations are probably far too low for Cybertruck deliveries, as well as their overall delivery and EPS numbers for 2024. If we do get production estimates for the Cybertruck, those Cybertrucks are already sold. That is something the markets are not expecting at all. But first, before we get production estimates, we are going to get the delivery event, I would imagine, on the earnings call as well, and then the subsequent date to start deliveries. It's a wild card whether we get production estimates or not, but I think at the bare minimum, we will get the Cybertruck announcement and the Cybertruck delivery date that will be announced. And I think that is enough to send Tesla stock 5 to 10% higher. If we get production estimates, maybe 5,000 a week or some kind of number like that for the Cybertruck, which would be about 250,000 vehicles next year, units of the Cybertruck, then I think Tesla stock could rally 15-20% coming on Thursday, the day after Tesla earnings. But again, this Israeli war has the potential to drop stocks on an index basis 20, 30, 40%. You would have to drop over 30% on the QQQ just to get back to the lows last October in 2022. So you could overshoot that. That is definitely possible if that worst case scenario does happen. Again, that would be Iran and Saudi Arabia restricting the flow of oil. 20 to 30% of the world's oil supply flows through that strait that I showed you guys in the first picture that is here on screen now. It wouldn't take much for them to restrict that. And that would be a big negative for our markets. But come to think about it, the Fed would probably have to cut rates at that point just because there would be so much restriction on the economy. That would probably end up being a net positive once this situation did die down. As far as Tesla stock and the option activity that we seen on Friday, well, it was 78% positive. I reported this already, about $814 million worth of Tesla options that were bought on Friday. For the whole last week, you had about $4.75 billion worth of option activity with a positive order value of 53%. This was actually quite strong considering Tesla stock did fall about $15 or so throughout the course of last week. So to see the positive order value over 50% is actually quite impressive. And why I like to pay attention to options is because options are a leveraged bet and or hedging for safety. So if you're buying options to the upside, you're taking a leverage bet. You must be really bullish on Tesla. Now, if you're hedging to the downside, well, that means you're probably just a little bit fearful out there. If you're buying a lot of puts and you're seeing a lot of put activity, then people are likely betting on a bigger downside move. Now, if we take a look at the bubble chart for this upcoming week, this gives you a real feel of where the option activity is centered. And you guys can see these green circles are way bigger than the red ones. Okay, so there's a lot more call activity, a lot more heading into Tesla earnings themselves. Now, some of the largest strikes for open interest and volume, a notable one right here was the 272.50 call expiring. These are October 20th, so this Friday. You had open interest of about 4,900 and volume of 26,000. Whenever the volume is so much higher than the open interest, that is a pretty good sign that there's a lot of activity. There's a lot of bullish activity, I should say, around that particular strike. If you look at the 275 call, you had a volume of about 30,000, open interest of 16,000. That's also healthy. At the 265 call, you had volume of about 19,000, also open interest around 19,000. Same thing for the 270 call, about 27,000 for volume and 27,000 for open interest. The 280 call had 22,000 for volume, 27,000 for open interest, and the 270 call, if we can see it right there, about the same thing actually, which is strange, about 27,000 for volume, 27,000 for open interest. If you look at some of the puts here, the 220 put only seen volume on Friday of about 8,000 with open interest of 27,000. The 240 put had volume of 14,000 with open interest of 21,000. You can see the volume numbers for Tesla puts on Friday were much lower than the open interest. So that is a really good sign for this week and Tesla earnings. Even the 230 put, you've seen volume of about 9,300 and open interest of about 21,000. So it's definitely the calls that are winning out this week. Let's now take a look at all of your Tesla stock news, and I find this one a little bit interesting and kind of laughable. Sawyer Merritt put this post out showing just the loss per vehicle that these other EV makers are taking right now. Lucid, 544,000, Neo, 35,000, Rivian, 33,000, even Ford at 32,000. Elon, all he did was respond with that. It's hard to make EVs. And Tesla, I don't know when these guys will catch up. I don't know when Ford's loss will go from losing $32,000 per car to making something similar as Tesla does. I just don't think that's probably ever going to happen. A Tesla Cybertruck was spotted in Palm Beach, Florida last night. You're starting to see a lot of these things out on the road. Hopefully that is a good sign heading into Tesla earnings that we will get the announcement. And if you do notice, I mean, this does not have RC on the side or any other lettering or numbering. This could be an auto reviewer. That could make some sense. Typically, before you actually, give your deliveries to actual customers, your auto reviewers will get the vehicles first. We've seen that with the Model 3. That was a little bit closer time frame. The videos came out from the reviewers like 2 days before we got deliveries to customers. Normally, they tend to get vehicles sooner than that, or a week or two or a couple weeks before they're released to the wider public to get that feedback to Tesla and ultimately to the company. So this is a really, really good sign. It looks like Tesla has now started deliveries of its updated Giga Shanghai Model Y. According to local media, this was a pretty small upgrade overall. The biggest notable thing that you can point out is the ambient lighting that is now in the dash. That's something that's very cheap, that is just appealing to a lot of people. You no longer have the wood interior. You have that carbon fiber, kind of like a speaker cover if you guys have a sound bar in your house. That's kind of like the texture you're going to see on these things. And you're also seeing new wheels, black 19-inch Gemini wheels. Previously, they were silver. Porsche has sold 2,050 Taycans in the US in Q3, up 55% year over year. This is about 10% of Porsche total volume. And take a look at this almost perfect duo. You have the Cybertruck on the left. This guy says AKA the Sun, and the DeLorean DMC-12, aka the dad on the right, aged 41. Yeah, I definitely see the similarity here. Auto Trader on the Model S Plaid track package just said, quote, "I've got to give Tesla their props, man. They came into the game with the Roadster and completely changed our perceptions of what a sporty electric vehicle could be like. They came back and changed our perceptions of what a high-end electric saloon could be like. They came back and did the same with the Model 3 and the Model Y, and then they've come back again with the track package and absolutely moved the goalpost. This car, I'm lost for words. This car does give you 1,020 horsepower. Holmar's catalog posted, quote, "It is now normal for my car to perform entire drives on its own with just computer vision, no interventions from me. Not surprising, not shocking, normal. Unsurprising, quotation." Now, Elon says and responded to him, "The car just drove me around Austin all day with no interventions required, despite ACL festival crowds. In the fairly near future, people will wonder why there was ever skepticism about self-driving." And remember, this is all happening presumably without that 10,000 NVIDIA H100 GPU cluster worth over $300 million helping train the platform. That's also by and large without Dojo having too much of a contribution to this as well. So just imagine when those are online, how much better FSD is likely to get in a short amount of time. You're going to drastically speed up the training process to teach these vehicles how to be the best drivers out on the roads. Now, if we take a look at Tesla's stock on the charts, keep in mind, Monday's probably going to be pretty red. We've seen a lot of escalation here, including what we talked about previously from the US, sending another strike carrier group. One of those ships has over 2,000 Marines that are highly capable of evacuation purposes, as well as assault purposes if needed. They're moving them closer. This is very escalatory. You're also getting Iran making some very ominous threats about potentially even jumping into this war within the next 24 hours or so if this assault on Gaza is not stopped. Let me tell you right now, it's not going to stop. Okay, Israel doesn't want to have rockets or attacks launched on them anymore. I think they're just sick of it, to be honest, and they've probably been waiting for this to happen, a reason to actually go in there and end Hamas for good. I don't know. I'm just some guy over here making YouTube videos, working on rental properties, fixing properties up and renting them out. What do I know? Okay, I don't know what the ultimate goal is here. I don't think a lot of people know. But the markets, this creates a lot of uncertainty. The financial implications of what Iran or Saudi Arabia could do to the energy markets wouldn't be good. Let's just say that. So you have to take this information in account here. It's probably going to be the most impactful thing to the markets this week. Tesla's stock in particular looks very bullish. You held support at your 50 and your 100-day moving averages. It doesn't look likely that we're going to bounce on Monday. It looks likely the markets are going to be pretty dang red. So the question is, you want to see support around 240. That's also going to be your uptrending line of support as well. You have found support here every other time. If you do not and you break under 240, this situation probably going to get a lot worse for the markets. The crash, I would imagine, would not stop there. Your next stop would be your 200-day moving average. That's down here at about $211.65. I do think you could see a sharp pullback in the markets. Tesla stock might actually get down to 211 before earnings if Iran did get into this conflict, or Hezbollah, or the US did send strikes, something along those lines. Direct implications of a worsening conflict here. So Heading into Tesla earnings, I think it's important what the markets are doing. If we head into Tesla earnings roughly around the same price we are, like $250 in Tesla stock, well, you're probably going to get quite an up move. Again, I don't know if we'll get volume estimates for production from Tesla for the Cybertruck, but I'm sure we do get to some capacity or another the announcement of the delivery event and probably the announcement of when the first deliveries are going to be. That's probably enough to send you up 5 or 10% as long as margins don't plummet or revenue per car plummets. I don't expect that's going to happen. I think EPS is probably going to beat the estimates. I think earnings are going to be just fine. They maybe won't be stellar, but as long as they're not terrible and you get this Cybertruck announcement, I think you're set to retest that $300 level. If you do get production estimates, something along the lines of maybe 5,000 per week, or around 250,000 for next year, that would be enough, I think, to send Tesla stock well into the 300s. So those are your important levels to the downside. Your important level to the upside is about 265. That is connecting your prior highs. They have served as major levels of resistance here. I mean, basically every time you have hit them, back here in January of 2021, in March of 2021, back here just recently before last earnings, July of 2023, recently as September, and as recently as even just last week. So you have gotten resistance here 1, 2, 3, 4, 5 times now. When you do finally break out, that's going to be a pretty big break to the upside. For whatever reason, if the markets did crash and you really went down this week or even next week and you didn't hold support at $200, I think the lowest point you would go on Tesla is around 150. I think if you could buy Tesla stock at 150, that would be a blessing, let's just call it that, for your financial situation, as long as this conflict wasn't super bad. As long as there wasn't, you know what kind of weapons being used. But no, that's not advantageous for anyone. So let's just hope this situation levels out, dies down, and we can all get back to business as usual. But don't count on that. If you guys would like to come trade with me live in real time, every time I send out trades, I do send out alerts. Link down below in the description of this video. Hit the like button and subscribe to the channel if you made it to the end of this video. And congratulations to you guys if you did, because you are someone that is serious about your financial future and staying up to date with everything going on in the markets. Again, a quick reminder, if you guys did not see, my name is Michael Tyler. Go ahead, follow us on Twitter if you have not done so already, or X, whatever you prefer to call it. We try to keep you guys up to date on what's going on over there as well. So that's going to do it for this video. Enjoy the rest of your day, and I will see you in the next one.